Hello everyone, Nick Shaheen here looking at Roku again. I did a video about a month ago. You can check it out on the channel, and it deserves an update. This was a chart from then. I haven't updated it since then as far as adding new lines to it. I know there are a lot of lines, but the message back then was that in that video I noted the fact that Roku was somewhere around here. I did a video before that, so 2 videos ago, and I said even though there's a gap fill opportunity, I would fade it, and it did fall. But then I said that the price action was as such tightening for Roku. This is a daily chart, by the way, and that a move was coming. And through the video, the last video I did, I drew these white lines while discussing it. So if you're interested how it came about, you can go look them up. I don't know which way the stock will go, but I do know if it goes one way or the other, where it's going to go. That's why I drew the white lines. And if you look at the upper white line, I drew it before the action actually happened. If you don't believe me, you can go watch the video and see it live. And it turned out that they broke out exactly how I said it was going to go on the upside, and failed about where it failed the first time. So had I done a video when it went up to 151, I would have said I wouldn't start chasing until it breaks out. In fact, I did put that line sometime. So my 2 lines are still on the daily chart, this one and that one, at 124 and change and 50 and change. Those are the triggers for big moves, in my opinion. So if I'm not a fast trader, I shouldn't look at anything other than these 2 lines. Before I forget, at the end there'll be a pop-up thing to subscribe to this channel. It's free on YouTube, and there are also some links in the description below where you can get to some other free stuff, so take advantage of it. Back to Roku. So people say, where's it going to go up? Going to go down? I continue to trade the range until the range breaks, and then I chase that break if I want to. That's the general idea of trading. Sorry, the markets are open, so like half my eyes are going the other way. So I'm not going to move these white lines. I'm going to leave these orange lines because they still stand. So the statement is the dips are being bought, and this was an emphatic candle on December 16th, repeated and confirmed on January 13th recently, and you can also argue that it was confirmed on December 31st. What do I mean by that? I'm going to zoom in a little bit. 4-hour candles. Maybe 2 hours will do. Okay. So now we are shorter term price action to illustrate the point. Proven support, proven support, proven support. That's why I drew the orange line. Why do I go a little bit lower? Just for, I don't want it to be an absolute penny trigger, so I don't get roped into chasing something that's not going to be there. I don't want the fake out. So this test seems like a good cluster of support on this time frame. So a little bit between the two, split the difference, there's the orange line. So I don't want to be foiled into or tricked into chasing a breakdown that is not there yet. So if I were selling, if I know how to sell premium in the options, which I did recommend to friends, was to sell the Iron Condor in Roku. Now that brings in money. It's neutral stance because I'm shorting it and I'm going long it at the same time with room to spare. So that's really the only way I can trade this until the range breaks out. So, but before I sell this range, I need to know where the breakout will take me and be behind it to be safe. So if I knew that this was going to be a possible scenario, I don't want to be selling in here. If possible, I want to be sell out here, and I don't want to include earnings. So this would be my options way of trading it. The other way is to chase the breakout or breakdown. So if this happens, if this triggers, I short it with a tight stop, or I buy puts to short it, or I put spread, put calendars. That's also a spread. When I say spread, I mean vertical. That's what everybody means. Calendars and diagonals are also viable ways of chasing it. So what if I'm a little bit faster trader? Then I would put an alert here somewhere. I'm going to put it here. And this will tell me, hey, wake up, Roku's gathering momentum. It will hit another wall, a roadblock at 145. The first alert here would be at 138-ish, 37.5, 38. And then if I catch it early enough, I can get on board and get out at 145. and then re-chase it above 150 or so. So this is for the active trader. Some people like to trade really fast, and they can trade the 5-minute charts, and there's a whole bunch of information there, but we're not going to go there. So maybe 30 minutes will give us more information. No, 120 was plenty. So when I'm trading a stock, I just like to take different time slices. So, and as far as what other things I use on the chart, I don't have a lot of things. I mean, there's a lot of lines on there, but I'm very consistent using levels. There's nothing more convincing than levels. Whatever history, whatever happened is going to play a role in what happens next. Some people use the RSI. I added it recently. It's a good tool in the tool belt, so to speak, but it's not the, like if I don't say, oh my gosh, the RSI is above X, I have to short it, or below, I have to buy it. No, I have to look at the levels first. I'll look at the RSI as a consultant. I'll look at the volume profile as a better consultant. And then I change the time frame. So I started with the daily, 1 year worth of data, so I can get a big picture. So I know where to put the line here, and I know where's the absolute support and trigger here. I know where the breakout happened before that. And even then, I can go to a weekly and zoom in a little bit to get a bigger picture. Sometimes if a chart is old, like it's an older company, I go to a monthly. In this case, it's not appropriate because it's not that old of a company. So weekly is just fine. And you can see that this week's candle, you can't even see it. It's like a plus sign right there. That means it's indecisive. The week is not over. That means that they opened it, they tried to rally, they tried to sell, they came back to where it is. They call these dojis. And they just mean that the market is indecisive. They love it. They hate it. You know what? We don't know. We'll just open it where it went, where it started. This one, the one before that, last week was not indecisive. They opened, they tried to rally, and they closed on the very low. So that's an emphatic, directional move. Now they changed their mind. That's because this is a level from which they broke out back in August. So see, just changing the weeklies, now we found another level that's significant. Why it's sticky here, why there is support, because this was an emphatic level from back then. And also the week before last, this candle right there, the blue, cyan, whatever color that is, it's also a doji indecisive candle, just like the one unfolding here, except this one left a long tail below. Usually they're kind of bullish. Notice where the tail is. Exactly where the low close was, and just above where we are now, and exactly same tail this week looks like. So they're consistent. Indecisive. Oh wait, I hate it. No, indecisive. So the next move is going to be boom, bam. It's going to be amplified. When they're indecisive, if it closes in the doji this week, 1 day to go. Today is Thursday, by the way. Then it might move big time next week just to make up. If you think about it, they wanted to act, they didn't act. They said, let's delay it until next day or next week, and then they do twice as much. So this one is indecisive but bullish. They tried to develop the bullish aspect of it, but then they failed. So that's why selling the call spreads here makes sense. Selling the put spreads makes sense until the either sides are breached. So this is my take on Roku from an agnostic point of view. I really don't care. I know I was bearish on it, but then I admitted that maybe I am missing a piece of the puzzle, but here's the bearish aspect of it. It's been in business for 17 years and it still loses money. The argument against that would be only the last 3 or 4 years maybe is when Netflix actually switched us to a streaming world. So maybe now the setup is different for it. So the earlier 10 years didn't really matter. Let's judge it on the last 4 or 5 years. So I can argue both sides. I'm leaning towards the bearish side because I have a Roku. I got it for free, or I bought it off of Craigslist or something, but I don't pay them anything. So I don't think I'm going to ever pay them anything. So my perspective is I don't use it. I don't have anybody that uses it as far as a premium product. So I just don't see the application for it. But that's just me. And I have a teenager in the house. So, okay. So if you have any questions, don't forget, subscribe and links below.